Good day traders, it's Richard Miller here doing a quick update on the Ichimoku cloud of Tesla. So we've got the Thomson Reuters icon platform open here, Tesla chart, Ichimoku cloud chart, or cloud charts as I would like to refer to it. And just want to run through the most recent trades the last couple of months. We had a lovely cloud chart bicycle here at the 39 zone and a nice 137% rally. Price action became extended from the top end of the cloud and generated a sell signal at around about 331. Then had a beautiful pullback. That came a fantastic rebound here at the standard line or the baseline of the cloud, and that generated a secondary buy signal, and we had a nice tremendous rally up until about this tremendous extension from the cloud, and there was a 484 sell signal right up there between 475 and 484. We had a fantastic strong pullback. 341 generated another cloud chart buy signal. That 341 support zone coincided very well with the 345 front end cloud chart support level. So watch out, these cloud chart levels are beautiful rebound levels to trade. A stock sells off, rebounds from the front end of the cloud. In this case, Tesla rebounded from the 345 zone. Had a nice little spike, got a bit extended from the top end of the cloud. This distance between the price here and the bottom of the cloud became extended. Pulled back once again, retested the front end of the cloud at 387 here. We can see this level here. Tested that level, rebounded from that level, and now pulling back a little bit back down to the standard line here. That's a secondary entry point for a swing trade. 410 is a significant support zone, so as long as it stays above this 410 387 zone, it should be okay. Any price action dipping below the cloud will obviously change it from bullish to bearish on a daily chart. So as long as Tesla is above the top end of the cloud and rebounding from these bottom end cloud chart levels, the current uptrend will be okay. But just be aware, any dip below the cloud here would change the outlook from bullish to bearish. So levels to watch out for is 410 and 385, any type pullback there. And will be interesting to see if we're going to get a rebound from this standard line. Now, from a cloud chart perspective, the standard line is the highest high and the lowest low over the last 26 days, divide by 2. So it's somewhat of a 26-day price pivot point, which is a key support level at that zone. Now, interestingly enough, Tesla is not a cheap stock. If we're going to look at some of the fundamentals, we can see the forward PE ratio is about 157. The sector average median is about 11.7. The enterprise to EBITDA valuation is 58, terribly expensive. Stock EV to sales ratio is 10 times, and the sector average is 0.74. So now do realize that you are trading an incredibly expensive stock. Price to free cash flow, or price to cash flow, is 78 times versus the sector median of 5. So it's very, very expensive stock. So be aware of that. In terms of risk, I need to point out other issues is the stock's beta, and be aware that that helps you to adjust your stop loss. The beta, the monthly 5-year monthly beta is 2.97, so the stock is about 3 times more volatile than the overall market. And watch out, downside beta is 1.6, so that's also quite gives you an idea of how risky the stock is. So be aware, incorporate any type trading strategy, incorporate the beta and the optimized stop loss strategy so that you have the right risk parameters in trading, so you don't get stopped out too early, and also that you realize that when the stock moves 5 or 6% in the day, you realize that that's even below average move or above average move. But keep that in mind. High beta stock, very risky, but nevertheless, key levels here to watch out for is this 410 and this standard line, or the baseline from the cloud, potential rebound. But any weakness, if it dips below into this 410 to 387 zone, that's also a nice entry point for a swing trade. Upside target would be the old highs here. Now do remember, the weekly chart is very extended from the cloud, so there's tremendous downside risk on a weekly chart, both from because the stock's frightfully expensive, the price performances outstrip the fundamentals basically. So just be aware that you are paying an incredible large premium for Tesla, and it's very extended on a weekly chart basis. So there is significant downside risk. Stock's got a beta of 3, so be aware that it's a very risky stock to trade. But so far so good. Look for support to come in at 410 or 385 as a key support zone, and any price action below the cloud will go from a bullish outlook to bearish. Until next time, happy trading.